Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex Daily Video Research. Today the 27th of December, and today we will talk about the British Pound. When during the last week of current year I decided to shift to cable because we talked much about the euro currency during the recent month. We discussed almost all the levels on the euro currency, so possibly I will return back to the euro currency during the daily video research if I will find something interesting. But in the weekly research I decided to talk about the Great British Pound, especially because we didn't talk about them during the, I think, about the month. We did not look at them. So let's renew our view on the Great British Pound. Well, in general, on the longer time frames there are a lot of possibilities for development, especially on the monthly chart, and I described them in my weekly research that I have placed on ForexPeaceArmy.com forum. Well, there could be butterfly buy or butterfly sell, and currently market stays in the just triangular consolidation, so there could be breakout as to the upside as to the downside. That's why I think that on the coming week the one possibility for trading is the recent swing to the downside on the market, because weekly trend is bearish, daily trend is bearish, so we can trade this swing to the downside with the possibility of reaching a deeper Fibonacci expansion target around 150-151 area roughly. But meantime, currently market has reached some areas of support that could lead to some bouncing to the upside that we can use for the establishing the short positions. So look at this first daily time frame. You can see the trend is clearly bearish right here. What market has reached already? Look at this pattern: A, B, C top. Market has reached 618, 100% expansion, shows 618 retracement, and hit 1618 expansion right here. Second, market has reached from this larger A, B, C top 618 target around 153.98. Also, this area is an area of weekly confidence support, although market has penetrated it and closed below it, but it's not too deep. I think that this area still could be in place, in play, so possibly it still has some support in this area. Also, take a look at this recent swing to the upside from this low to this high. 127 expansion of this swing to the upside is also right here. You can see. Also in this area is weekly pivot support one of the previous week. So this is rather strong support. Well, also we can see this building the bullish divergence in this right here, although market hasn't quite turned to the upside, but in general we can see this low and this low and the same lows on the MACD. We see some divergence in here. Due to these factors, the probability suggests that market can show some bouncing, some retracement to the upside. And I think that we can use this possible bouncing for the possessing ourselves to the short, on the short side of the market. Now let's look at the daily time frame, but from the perspective of the levels of resistance, to estimate the possible areas to enter short. The target of this continuation to the downside will be this area of agreement, 150.15, 150.88. So this also strong area of support, because it established by the 100% expansion, roughly ABC, D, and 618 support from the whole swing up on the weekly time frame. As you can see that this led to the downside, and current move is very harmonic. So this will be very good for the possible support in this area if market will reach this area of support. Now, this is the same daily chart, but with the areas of resistance. Let's look at it. First area of resistance 154.58, the 382 resistance from this high to this low. This is the closest resistance. Also take a look at this blue dash line. This is the weekly pivot point for the coming week. It's around 154.39. It's very close to this first area. The next area, it's right here, daily confluence resistance 155.27, 155.58, and weekly pivot resistance 1. It's around 155.32. Well, why I pay attention to these areas? Because when market retraced on the long-term bear trend, it very often retraced to the weekly pivot resistance 1, and this area is right here. Moreover, it coincides with the daily confluence resistance. The ultimate level, this ultimate level of on the daily time frame, is also the daily confluence resistance around 156.88, 159.09, 157.09. It's right here. This is, by the way, the 382 resistance from this high to this low. Also, take a look. The blue line is right here. Jordan Napier later predicted, shows us level of overbought and oversold. But currently we are interested in the overbought level. It's just above this area of confluence. Besides, if market will show some calling in this area, this level can move a bit lower and will be very close to the daily confluence resistance. This will be the area of resistance and daily overbought. Very strong area of resistance that also could say us how market strong. If market suddenly can break through this area and break through the daily overbought, this will tell us something different. It will show us how strong market is in reality. So there are three possible areas to enter on the short side. First area, second area, and third area. How we will use these areas? The first area is also the beacon area. Why? Because we should first take a look how market will respond, how it will behave in this area. If market will fail there, just touch the weekly pivot point and fails, we will see some bearish signal, for example, head and shoulders on the hourly chart, some maybe double repo sales on the 30-minute chart, on the 15-minute chart, something like this. We can enter on the short side with the stops nowhere above the high of the swings that will be determined when the market will reach this area. Because market, when it accelerates to the downside, usually just touch the weekly pivot point and continue move down. If market will move above this area and hold there, then don't be short. Wait for the deeper retracement, and I think that next area that market could reach will be this area, 155.27, 155.58. Also weekly pivot resistance 1. If market will reach this area and we will see some sell signals in this area, so we can enter from this area with the stops just above the second area of confluence resistance. Because if you are short, you will not want to you do not want to see if market will break this area above and will move above the daily overbought. This will mean for us, if it will happen, that market is really strong and our position to the downside will be wrong. If market will still break this area to the upside and we will not see any sell signals in this area, market just can break it to the upside. Well, the last guess for the bears, this area of resistance. Well, because market, if bears is still in charge, market shouldn't show some very deep retracement to the upside. It should not take out this swing to the downside. Bears should hold it, especially if we take into consideration the area of overbought in the market. Now, on the hourly chart, we can see a couple of things. First of all, nice ABC pattern, very harmonic, with a target that makes an agreement with the first area of resistance that we have just discussed. Also, this is the weekly pivot point. Okay. So that's why I pay much attention to this area, because market really can just fail in this area and accelerates to the downside. It could be in fact. If market still move to the upside, then if you're like to trade intraday, then you can just scalp this move from this area to the next area of resistance, this confluence and weekly pivot resistance 1. Also take a look, this is also the 127 expansion target from this high to this low. Well, I do not call it like the butterfly, because this previous move to the upside in the opposite direction of the butterfly is not sufficient for me to call this. I just treat it like the expansion of the previous swing to the downside. Okay, it's also very close to the next confluence resistance area. So this will be the next target of the possible move to the upside. So that's been said. In general, I think that currently on the Great British Pound could be actively traded only the daily time frame, the last swing to the downside. Currently we see that market has reached some different support areas, this weekly pivot support, a couple of Fibonacci expansions, one expansion from the retracement. So also we can see some signs of the bullish divergence in this area. Other words, market can show some retracement to the upside. Also we have discussed the three possible areas that we should watch for sell signals in it. So this first area of agreement, next area, next confluence resistance, and the third one is right here, so this area. Well, in general, if you are bears, you will not want to see how if market will break above this area. In this case, this will mean that market is stronger than it seems on the first view, and the placing stop orders just above the area of daily overbought looks absolutely reasonable from the logic point of view. So I still think that this area should be reached by the market, and it will be very nice for the possible positioning ourselves on the short side of the market.